with the vision. How many years are you doing this now at Circle? That's your 11th year?
So yeah, founded Circle a little over 10 years ago. Yeah.
So I think you are, and Circle is a case study in entrepreneurship in terms of adapting, moving with the industry, and trying to get ahead of where you think the world is. So give us where you were and where you are now and where you think we're going.
Sure. You know, when we were founding the company 10 years ago, the technology in this space was super nascent. But the basic idea that we had, just understanding what the technology was and where it would go, was that we would eventually be able to have what I would call back then like a protocol for dollars on the internet. So the internet has all these protocols for information and data, and we saw that, you know, once you had blockchains that had things like smart contracts and others, that we could actually build like a protocol for dollars on the internet, and that would eventually lead to a model for exchanging value, transacting value that kind of mirrored the efficiency of how we exchange information. That was the kind of core vision and idea. There was no regulation. This was, if people think, you know, this industry is a Wild West, it was an extraordinary Wild West then. But we kind of looked at it and said, you know, if we work with policymakers, if we try to become compliant, and we keep kind of iterating on the technology, that eventually we'll get there. And so that was at the start. It took about 5 years to get all the kind of basic regulatory structures in place to be able to issue USDC. We launched USDC just over 5 years ago. And that was, you know, the technology became possible. We launched a protocol where you could issue and transact digital dollars on the internet over these networks. And now here today, right, we've transacted nearly $13 trillion on chain. We're the largest regulated dollar stablecoin in the world. And, you know, a lot of the ideas that were ideas on a napkin 10 years ago are coming to pass. And so that's kind of where we are today. But I think to the last part of your question, this is still a very nascent technology and a nascent industry. Even though we've built a sizable business, the amount of activity that's ahead is extraordinary, right? I think the market for electronic money, the market for the kind of payment systems in the world, and the way in which that's going to be absorbed by an internet financial system is extraordinary. So I actually feel like we're kind of at the starting line now. It took us 10 years, but we're now kind of truly at the starting line for building this out in a much more meaningful way.
So Jeremy, it's 5 years from now. Let's say we're at the beginning of 2029. Am I going to have a stable coin, your coin, Circle coin, on my phone, and I'll be able to walk into any vendor at that point and transact? Or when do you think that happens?
I think so. So if you think about where we are today, a lot of the technology that we, like digital currencies, stable coins, blockchains, digital wallets, all this stuff, as you probably know, being active in the space, right, it's still complex. There's still, you need to know too much, it's too confusing. And so the key thing that's happening right now is there are huge improvements being made in what I'll just broadly call blockchain infrastructure. It's sort of like when we went from dial-up internet, which was a pain in the butt and was complex and it was slow, to broadband internet with like mobile devices, right? Then all of a sudden, like gazillions of apps grew, the user experience got really good, and the complexity of the internet went into the background. So over the next 1 to 2 years, the complexity of blockchain and crypto wallets and all this, it's going to go into the background. And at the same time, all around the world, we're seeing clear regulations for stablecoins, which means that this kind of electronic money will basically be as good as a cash equivalent electronic money in the world. And when you combine that together, the sort of scalability, the user experience, the regulatory clarity, then you have the basis for this to scale out to, really anyone in the world with a mobile device will be able to hold and transact in, dollar stablecoins and other stablecoins too, but it'll be invisible. Like you're not going to think of it as I'm using a stablecoin any more than you think about like you're using the SMTP protocol when you send an email. You don't care. It's just like it works.
I'm going to put my regulator hat on for a second and talk about our system, fractional banking, and general vulnerabilities in the system, and potential runs on banks and things like that. How can stablecoins, if at all, help the system and help shore up the system and make it safer?
It's a great question, and it's like something that I think about a ton, and it's like core to the philosophy of stablecoins, which is that the existing electronic money system is 95% of it is privately issued money by commercial banks. And so you look at your bank account and you say, I've got $1 million. What you have is you have $1 million IOU. And there's not actually $1 million there. There's a fraction of that. There's like a tenth of that. And hopefully, not everyone comes and asks for their money back at the same time. And yeah, there's mutualized insurance schemes and other things to deal with it. But like fundamentally, that promise is there. The promise of stablecoins is that what I think of as the base layer of money on the internet, it should be full reserve money. It should have no embedded lending risk in it. I should know that it is like cash equivalent in its nature. And if I have something like that, that's going to be a safer instrument for settling a transaction, for providing collateral, for all these things. And so stablecoins, if properly designed, can essentially be a safer asset. And then you still need credit, so you still need lending, but that credit and lending can be built up on top of things like stablecoins. And so people talk about CBDCs as like a digital currency model. Stablecoins are effectively like CBDCs, where you have this extremely safe underlying reserve model, but you get the sort of the physics of the internet, the velocity of money on the internet, and we need a layer like that if we want to see an internet financial system really develop and scale.
Okay, so let's talk a little bit about that. The adoption, 10 years for you, your 11th year. This is my third or fourth year in crypto, which I've aged like 25 years since I came into crypto. The adoption is slower than I thought. Now, I don't know if it's slower than you thought, but if it is, chime in. But how do we speed up the adoption?
Yeah. So I've been asked this question for 10 years. Like, what's the mainstream catalyst, all of these things? And having been, I'm a technologist by background and have been involved with the development of the internet since 1990. So I've looked at these sort of epics of the development of the internet. And from 1990 to the year 2000 was 10 years. And it kind of moved, and it moved slow. I was like super excited in 1990, but it was like no one could use the technology then. It wasn't really even commercialized. But even in the late 90s, it was overhyped. It was, we call it the worldwide wait. It was like everything was painful. And so there was a lot of overhype. And the dot-com crash really reflected the fact that everyone was trying to build all these businesses, but technically, really, you couldn't do it. You couldn't deliver the goods. So when I look at what's happening with blockchain tech, I look at it very similar, which is basically we've gone through this cycle of like raw early technology to an overhyped cycle to now it's like I would say we're in like the 2002 of the internet, where all of a sudden the broadband pipes are getting laid down. All of a sudden the software that makes the experience of the internet far, far better is coming online. That's where we are with this. And so essentially you need legal certainty. So you need legal certainty on how these are treated and how they're used. That's happening. You need scalability. So you need infrastructure that can readily support, both from a user experience perspective and a raw throughput perspective, the kinds of things where you can do internet scale things. That's happening right now. And then you need a free market environment where you've got entrepreneurs and developers and other things building. And I think that has happened, and I think we're going to see another pretty significant wave of invested capital into people building on this now that we've kind of, I think we're clearing away some of the debris, as it were. So I think my view is that that kind of mainstream catalyst and the experiences around those are really right in front of us, and we'll see over the next 3 to 5 years that sort of scaling out to where literally 1 billion or 2 billion plus people are interacting with this on a regular basis.
So obviously I'm a huge fan of yours and Circle, and I interact with your team on a regular basis. And when people talk to me about Circle, I say, well, you are the industry standard. You're effectively the tissue or the Xerox. You're the one that people are going to come to. How do you talk to me about your culture inside the organization, and how do you maintain that and grow that? Because it is so early. We don't want you to be Ask Jeeves to Google.
Right.
And so how do you get that now that we're ready to ramp and launch? How do you maintain that and exponentially grow it?
It's a great question. I mean, I think we've tried to develop a culture in the company that balances an incredible focus on integrity, risk management, compliance, doing things the right way, even if it's hard, going in through the front door, being transparent. Like, all these things are important values that we have, that we've had all along, and we continue to pursue those. But at the same time, like, we've been building out, for example, our kind of product engineering organization. We look more like a tech company. So if you looked at the OpEx of the company and so on, like, we look more like a tech company in terms of the investments that we make. And the people who are leading the technology side are people who've led and built major products for Google and Facebook and internet scale companies. And so we think about, part of what we do is, how do we build internet scale platforms, utilities, infrastructure, solve those really hard technical engineering problems, and be highly transparent, focused on working with policymakers, regulators, integrity, compliance. So we have to bring those worlds together. We've done that, in the scrappier days of Circle. We're doing that right now. And that's, people talk about fintech, right? There's what you need to do to be a fiduciary and be supervised as dealing with important things for society, i.e. money and contracts, and technology, which is, people associate with internet innovation and this velocity of things. And so the magic is when you can kind of get those to work together. And I think we've done a very good job of that so far. And I actually think in the coming years, like, that's going to be critical, right? That balancing those things is going to be really, really critical. The move fast and break things culture, reckless, kind of things. That hasn't worked out so well in this industry,
right?
As we've seen.
Well, I mean, that's also speaks volumes to your duration in the industry. We had a regional banking crisis earlier in the year, March. We saw Silicon Valley Bank, Signature, First Republic, all face issues and get absorbed by other banks. And there's been extreme stress in the system as the Fed has raised rates.
Yeah.
Tell us about Circle before the crisis and after the crisis. What steps have you taken to fortify Circle?
Yeah, so we've had a long process of, how do we provide the most resilient and transparent kind of reserve structure for a stablecoin. And as a firm in our industry, and you probably know this as well, firms in our industry, it's not like we can call up JP Morgan Chase and say, will you give us your banking infrastructure for what we're doing? I think lots of companies, in this industry became dependent on small regional banks like a a lazy community bank in San Diego becomes systemically important to a market, which is pretty crazy, right?
Right.
So we had long been undertaking efforts to constantly upgrade our infrastructure. And we're one of the only companies in this industry that is banked by global systemically important banks and asset managers. And so when that banking crisis hit, importantly, we literally saw 3 banks fail in the matter of 2 weeks, all 3 banks that we depended on.
Mm-hmm.
At the same time, we had been, for months prior to that, onboarding more redundancies, both GSIB banks and other like high-quality fintech banks and the other. And so literally, we had 3 banks fail that were critical to the operations and infrastructure of what we do. And by the Monday after that bank failure, we were back online with new banks that we had been working with. Now, there were some frantic phone calls and
Sure.
a lot of fun there. But on the other side of it, where are we? The USDC reserves, 95% of the reserves are held in the Circle Reserve Fund, which is an SEC registered and supervised fund issued by BlackRock with daily transparency into every single government bond, repo, and cash instrument that's there. You can go to USDXX, you can see 95% of that on a daily basis in an SEC supervised vehicle, which is the most transparency, tremendous liquidity management, better than anything out there by far. The cash pieces and the remaining 5% of cash is exclusively today in GSIBs. And so we have this critical infrastructure that's there. We work with Bank of New York Mellon, BlackRock, some of the very best custodians, banks, asset management firms in the world. And that's foundational market infrastructure now behind USDC. And so today, in terms of digital dollars on the internet, we are by far the most safe, transparent, liquid, et cetera.
And safer today. So weirdly,
safer today.
The system breakage
Yeah.
fortified Circle.
Very much. And the other thing that we've done is we haven't stopped there. We have a global initiative underway to basically bring regional banking infrastructure with major banks like here in Singapore. We just launched yesterday what we call Circle Mint Singapore, which is fully regulated by the MAS. And it's stablecoin issuing and redemption for USDC with major banks here in Singapore with domestic banking system integration. Huge undertaking to do that. You're going to see us do similar things in other major financial market centers in Asia, in Latin America, in Europe, in the coming quarters. And so we're basically, we're building a liquidity network with best-in-class banking, reserve management, transparency on a global basis. And so we've kind of doubled down, tripled down on that, what I broadly call kind of banking and market infrastructure side of what we need to do so that we can offer essentially, a digital dollar dial tone, as I like to think of it, all around the world to anyone who needs it.
I know that Asia is super important in terms of the framework of your long-term strategy. Tell us, in addition to the initiatives that you just described, other things that you're working on in Asia, in the subcontinent, India, et cetera.
Yeah. So, the demand for things like USDC is pronounced in Asia, emerging markets, where people want digital dollars, where the demand on cross-border settlement, remittances, these kind of both SME and household and other flows are really important. And these are markets where the digital asset industry is thriving and is significant. So you look at like trade volume, things like that. So those are all critical. Asia is our largest investment area in terms of market growth. We've got a good size office here. We have another major office in Taipei, and we're expanding throughout the region, hiring people in a number of other countries. But I think the efforts for us, though, are, in addition to kind of building out that liquidity and infrastructure, we're partnering with the companies who are at the forefront of building consumer scale applications in the region. So we recently announced a partnership with Grab, which is obviously the largest super app in Southeast Asia. Grab is adopting our Web3 wallet and technology stack into their own platform. And what you'll see in the coming months and quarters is more and more partnerships that Circle's forming with leading fintechs throughout the region. And leading companies that have internet scale distribution throughout the region, enabling their products with a Web3 layer and enabling those products to be able to transact with stablecoins.
Matt, I'm gonna take you back to the heydays of 2021, okay, and then the absolute unmitigated disaster of 2022.
Sounds fun.
Yeah, and so we had this, we were riding the cyclone together at Coney Island. But where are we now? Because you mentioned 2002.
Yeah.
And for those of us that are old enough to remember 2002, we rode that cyclone as well through Web 1.
Right.
And then it stabilized.
Exactly.
And now you have 6 or 7 of those names that become effectively
absolutely
big tech.
Yeah.
So I guess, how many more runs of the coaster before we start to stabilize, Jeremy?
Well, my view is we have stabilized. And I measure that, you can measure that, if you want to look at like crypto prices or whatever, that's like some indicator. But I think the more important indicator I'm a technologist, so I look at—
How many times a day do you check crypto prices? Just, I think I'm up to like 600, but I just want to know.
It's a good question. Not every day, which is good.
Good for you.
Yeah,
so you've detoxed. I have to.
I have.
I have to go into a detox.
I've got a long view.
But you feel we're stabilized, so tell us why.
On that. But again, I look at this from a technology perspective, and also from a regulatory perspective, things like that. The technology, like Web3 technology, digital wallet technology, blockchain infrastructure, we're seeing compounding improvements on that. The velocity of things that are launching is very strong right now. And a lot of the projects that had been, maybe they were extraordinarily valued in 2021, they're still really meaningful with deep engineering. You're seeing that with like the Solana, infrastructure and community as a recent example. But, and you're seeing that. So just at a technology level, we're seeing a lot of really exciting improvements and key things that are needed in how do you do tokenization, how do you do identity on a blockchain, things that are necessary to kind of break this into other application categories. So you're seeing that. That's stabilizing and actually kind of moving up and to the right gradually. Regulatory clarity is the other piece. I mean, we've got comprehensive regulatory policy in the EU. The UK has just rolled out the framework for theirs. The MAS has been now very actively authorizing, supervising, and also rolling out new guidelines for things like stablecoins. Japan, they're very focused on this and provided guidance. So you're seeing the major G20 markets, they're just moving forward. And they're looking at things like customer fund segregation, controls, enterprise risk management. They're like, okay, you better have these things. But that's important too. So the confidence that comes from regulatory clarity is starting to emerge as well.
When you think about the U.S. for a second, because you mentioned a lot of great, dynamic, mature countries.
Yeah.
But I sort of feel like, and maybe you'll disagree, but I sort of feel like we're behind. Maybe it was the FTX debacle that slowed us down, or maybe there's some octogenarians in the Congress that are slowing us down. What do you think about the U.S. and the promise of a stablecoin bill getting passed? We've got about a minute to go, so just give us your rendition.
So the good news, there's good news and there's bad news. The good news is there's bipartisan interest in passing laws to create structures for both markets and stablecoins. There have been bills that have moved out of committees into the House. And on the stablecoin matter, there's clearly a desire from, I think, the administration, from the big, the Treasury Department, the Fed, and Congress to get something done. So is that happening in the next, 6 weeks or in the next 6 months? It's going to happen. So I think that's there, and I think that's a very important piece. I think the we have both a securities agency that has taken a particular view in terms of their ability to regulate this or to enforce in this. You've got other agencies taking a different view. Congress clearly has to act here. And I think it's unlikely in the current Congress that we're going to see comprehensive crypto markets regulation. So that'll be a 2025 thing. The U.S. will be probably last to the table, but the stakes are higher for the U.S. The U.S. is the financial system, the sort of capital markets of the world, the banking system of the world for large parts of it. And so the stakes are higher, but I think the impetus is there to get that done.
Well, I want to congratulate you on all your progress and great success, and I look forward to being a part of it with you. Ladies and gentlemen, Jeremy.
Thank you.
Really